Welcome to the Trading Market Technicals Morning Call video for Thursday, April 11th. Market surging yesterday from an early release of FOMC minutes, which came out early in the pre-market session. To me, it was kind of a double-edged sword, though. We were looking at quantitative easing to be infinity, so to speak, from the Fed, and there were many members stating that we need to cut back asset purchase, which is a good sign, basically, that we have a healthy economy. The economy's kind of chugging along. However, we're up at these lofty levels because of free money. So we really need to understand that going forward, and just kind of keep a keen eye on what the Fed's going to be doing, because that is going to be the key driver of this trend, continuing or starting to pull back. Yesterday was also due to a big short covering, and partly due to the dismal non-farm payroll numbers that came out on Friday. I would suspect many market participants put on many shorts to anticipate a rollover coming, obviously, this week, which did not happen. And then once we got the gap up yesterday morning, markets actually surged higher pretty much all day, consolidated a little bit into lunch, and then started ticking up higher into the close and into after hours. So we have this euphoria of equities. Everyone is talking about equities, about how the markets are doing. My 401k is back. I'm putting more money into my mutual funds. Well, be cautious, because, and I say this, and I've been saying this since the first day of the new year, when we gapped up from the resolution of the fiscal cliff, so to speak. And the reason why I say this is because right now everything looks rosy, but we need to really be cautious of where, for the longer term investor, the swing trader, like I always mention, just be cautious, because anything could happen at any given time. True, there's no catalyst right now for the market to roll over, unless, of course, if the Fed starts to kind of pull the reins on quantitative easing, then I think that the markets would, people would eventually take profits. Right now, we have this huge euphoria of buying, and everybody wants to buy stocks. You have to be careful, because when you have that, you have one-sided, the boat is tilting over one side, and fear rolls faster than greed. Remember that. Fear will we could take out weeks and weeks of uptrend in several days. So we really need to be cautious about that. And that's why I am sticking to this just day trading. And a day like yesterday can be a little frustrating when if you're not going into the day long, which that's my choice, because I'm not looking to take overnight risk, and the market continues just to gap up or grind higher with no volatility, making less and less to do for the day trader. Okay. However, it keeps me keen, keeps my mind at ease, that I'm sharp enough to say, okay, we're going to do this, we're going to do that, and if there's nothing going on, I take a step back and I'm ready to fight for the next day. And I'll take my little jabs here and there and take profits, and that's the way you should be trading this market, because I've got many questions. How do you trade a market like that? Well, it's very difficult yesterday if you weren't coming along. A lot of the indexes are moving, and there are selective few big cap stocks that are moving, of course. But if you look at it in a whole, and I showed you yesterday the S&P with the stocks with the 50-day moving average, which I'll just show you right here again, you'll see that stocks are not really as moving as much as the S&P is. See, we have higher, low. Now, we did surge higher yesterday here, but still hit that downtrend line where we're taking out the highs here. So the stocks aren't moving as much as the indexes. Now, if you're an indexer, right, if you're looking just to trade indexes, you're doing great, or if you're holding stocks, you're doing fantastic, actually. But if you're in a day trading arena, you're either doing okay, you're making money, but you're not as active. Unless you want to be, and you're looking for, and you're putting out that risk. I'm just waiting for the right moment as far as earnings season is concerned, which we had to kick off an earnings season, and that's what we're looking to do. We want to manage our risk properly and trade your trading plan. Trade the plan that you have that's working for you. Don't deviate because you're slow, you're not doing much. That's not what you do, because when the trader isn't doing much, or he feels that he's lacking with the market, then he'll put on another indicator, or he'll do this, he'll look for the holy grail. It doesn't work. Stick to the same plan that's made you money from now, and then continue with it. Just have to be slow and manage your risk properly, because with this market euphoria just going straight up. Now, can it go higher? Absolutely. We are not looking to pick tops and bottoms. The last couple of days, I said it looks like we're going to go higher. And today, I'm going to say look to buy dips if you can, that the stocks that are not so extended, or sell relative weakness. Sell the market, sell a stock that has relative weakness to the market, maybe an earnings downgrade, a downgrade or an earnings miss or something like that. But we just look to stick to the trend, and the trend right now is up. And if you're looking to stick to the trend, you need to be buying dips, or again, which is fine, selling relative weakness to a stock that's rolling over because of some bad news that came out of it. But it has to be a real good bad news, okay, on a market like this, because people just look to buy dips on anything. So you really need to be cautious about that as well. Okay, so that's just wanted to give that little couple of minutes because there's plenty of opportunity to come in this market, and I think that we're almost there. And why? Okay, so before I answer that question, let's just go right to the. I just want to show you a couple of indicators. I'm not going to show you much, because there's really not much here. I haven't shown you the NYMO in a few weeks because really there was nothing going on. As you can see here, we hit low. We hit that low again. Now we're back into the 13. So we're really right in the middle, halfway in between. In the NYMO, we have plenty of room to run to the upside before we really get overbought. But on your daily momentum indicators, they're way overbought already. Just alone from yesterday, for the last 3 days, from Friday's low up until now. So in the momentum indicators, we're really overboard. But on a NYMO, which is it is also a momentum oscillator, but this here has more room, and this here is a really good indicator. So I just wanted to show that to you real quick. Let's take a look at VIX smashing lower again. No fear. Okay, so we're coming back into this 1229, 12 area. We're going to keep an eye on that, see if that breaks, maybe produce another black candle. All right, and then here's a CBO, which actually closed bullish, up at 0.85. Okay, so we're still in the bullish arena in the CBOE. Sentiment is extremely, extremely high. Okay, let's get back to that question. So why do I think that we're almost there? I think S&P could go to stocks. The spiders can go to 161, 162. We've made all-time highs, and it's uncharted territory. But why do I think in the next couple of days is really important? Well, we've had a big run when we had a big short covering, and I like the volume today, which is really good. But volume could also act as capitulation. So I'm looking for, now this may not happen, right? This may not happen. S&P's up only 2. I would have loved to see S&P up 5, 6, 7 handles in the pre-market, and then gap up, and that's really the reason what I'm looking for. I'm looking for that capitulation trade. If the market gaps up today, and gaps up, but I'm not saying a gap up of 3 handles. I mean a gap up, a good gap up, and run hard into the morning. And then the market starts to roll, and then starts to sell off, and comes into a flat or closes negative today. Now, I know that sounds a bit stretched, but if the market gaps up hard and then runs hard for the morning session, kind of stalls, and then starts to roll over, and you see profit taking, then I think you have a tradable top. How long? I have no idea. I'm only letting you know a situation, what I've seen many times happen when you have these little bursts of short covering and people get all excited about stocks. So that's what I'm looking at right now. If that happens today, again, I am just anticipating, looking for a possible trade if that were to happen. Now, if not, we stick to the same routine, right? Either you buy dips or you sell relative weakness. That's the bottom line. I would not be looking to short the market, picking a bottom in gold. It's not worth it because you have the Fed behind it. They're going to continue until they stop. Then this market has a possibility of rolling over. Or if there is geopolitical event, North Korea. Other than that, stick to what's working. And even if you're slow, grind it out, make a couple of bucks, because then when the market does turn or volatility picks up, and that's all we need is volatility for the day trader, right? Then we're going to increase our activity, and that should put money in the bank, okay? So that's what I'm looking for in the next couple of days if that were to happen, and that's how I would play it. All right, so real quick here, I'm going to run through the rest of the charts. There's really not much to show you other than the fact that we did break here. Now, if we were to roll, this would be our big support area, a real big support area, 156.75 in the spiders. So this is where the first buy-in would be for the market participants looking at spiders, okay? 30-minute broke out of our channel here, thank God, finally. Now, like I said, right up in this area here, 156.35 will be the first buy-in, even just above main pivot. So if we were to sell off a little bit and catch this, this would be your first buy-in of the market if you're looking to buy dips in the S&P or the spiders. Okay, and here is the IWMs. Now, one thing I want to make a point is that the markets, the sectors, excuse me, that were lagging picked up yesterday. Okay, that's a very good sign as well that the markets may continue and can continue higher. Russell, XLF had a great day. Technology had a phenomenal day. So you have to keep that in mind, all right? Don't short the market because you have to just be short because the markets are at these levels. Yes, it will be a short, but let the market tell you that it's a short. Let price come down and let price start making low lows, breaking key pivotal support levels. Okay? IWMs, here we go. Nice big recovery, right? We had a pause day yesterday underneath support. We broke right through it, and now we're back into this area here. So again, we're back into this channel, but a real nice move from the last 3-4 days, and that's what you want to see with an increase in volume. That this key sector is moving higher. Transport, same thing. Okay, transport's smashed through this uptrend line, which was resistance, and now broke in and closed at the 20-day moving average. So let's see what happens. Maybe they rally back up to this area and then fail. That's to come. We don't know. We'll just take it one day at a time as well. Here's the XLF back into this big bearish rising wedge. Now we're at resistance again. We are right here, but had a big move higher. Okay, with this sideways consolidation here inside the wedge. Now we broke back up. Now this could really, if the banks start to get going as well as technology, and you have Russell and the transports pick up steam, then I really don't think, unless there's got to be some sort of a catalyst, this market can easily go S&P 1615, 1625 in a blink of an eye. Diamonds, again, new highs, uncharted territory. And they just keep piling into the brick and mortar, I got to tell you. But it looks good. I'm not a Dow Jones trader. Dow 30 stocks, they kind of bore me. So I like to trade what's interesting to me. Apple had a real nice day yesterday. Double bottom, off the double bottom. We had 3 inside day candles, little dojis, and now we broke back out of it. So let's see what has a little momentum to the upside. Maybe we can get to that 450 area and then reevaluate. But so far, holding the 420, which is actually constructive to the bulls. Okay, SMH, exactly what you want to see. Nice big move up, nice big surge up, actually. And now we're back into this area here looking to test it. Now, if we take this out here, then this head and shoulders pattern that I mentioned is negated. Okay, it did test it, broke it, validated it, and actually went down to 33.50. And now if this thing takes out that right shoulder, then, and I think it's almost pretty much there now. Another big pop up into today, then this head and shoulders bearish pattern will be negated, and then we will be looking to test this inside of this lower trend line. But again, bullish, guys. Okay, bullish. And look at the Qs, big blast up. That was the help of technology and of course Apple. And look what happens. You have a month of consolidation, 2 months of consolidation, then another month. And then all it takes is 4 days to move higher. And this is what I'm saying here for the downside. We can have twice as big candles and go from red candles to the downside when and if this market actually decides to roll over. And it will. It's just a matter of when and a matter of what's going to take it to roll over, okay? All right, guys, that's really about it. Again, stick to your trading plan. Stick to your stops. Do not be stubborn. If you're looking to take a short intraday, that's one thing. But you can't let your short go and continue to go thinking that the market's going to pull back. With the algorithms and high frequency trading, it's almost against you to do that. Stick with the trend. The trend is your friend. I know it sounds lame, but it is your friend. When you're day trading during the day, you have 6.5 hours to be right. So you get the trend, you're 50% right. Okay? All right, guys, have a great day. We'll see you tomorrow. Take care.